Good morning, everybody. How are we all doing today? Monday, February 6th, brand new start of yet again another beautiful trading week. We've got quite a bit going on in the market with the pullback that's starting to take place. And I would really, really, not only for my own sake, but truly for your sake, encourage you to watch last night's midnight special. It came out really late, probably close to like 12:30 or something like that last night. Regardless, if you watch last night's video, it's the full in-depth breakdown. It's been a bit of a struggle to put out the weekly updates, and I know, it's just a video. I don't owe it to anybody. You guys can, I'm sure that there will be someone in the chat consoling me and saying, don't worry about it. It's no big deal. But to me, it is a big deal. For the channel, it's been about 3 years, maybe close to 4 now, where I haven't missed a week of uploading a video on a Sunday. So for me, that OCD sort of aspect, the consistency aspect, the idea that I've done all the research that day to put together the video and to not put one out, it seems absurd to me. So the video is going to go out usually, regardless of how late it actually is. And I do appreciate you checking in on that. But again, it does just have all of my complete thoughts as to what I think about, the nature of the pullback here, whether or not it's plausible, if new money sellers are stepping up. So if you didn't watch last night's video, at some point today, just get on over there, check it out. You'll hear my full in-depth thoughts, of course. But this morning, we're going to check out what's on tap for directly when the bell rings at 9:30, as we typically do. So economic calendar is here. You'll notice that we have no announcements on today's session. February 6th is a blank slate, but pretty important tomorrow at 12, so right around lunchtime, Powell will come out with a speech, and I imagine that it comes and, sort of reinforces the ideas that he discussed on the FOMC press conference that he gave last week, right? So maybe some volatility tomorrow around noontime. Wednesday, we'll get Williams speaking at 9:15 here. So while we're doing the pre-market prep, we'll see if there's any reaction from the market. Waller speaks later on that day at 1:45. Thursday, unemployment claims as always. And then Friday, a little bit of volatility, to be expected at 10 a.m. on preliminary consumer sentiment and inflation expectations. Waller speaking again at 12:30. So the main things to be focused on here are probably just Powell speaking, and then the consumer consumer sentiment and inflation expectations for Friday. Those are the big things I would worry about from the economic calendar perspective this week. Let's have a look here at the stock-specific headlines, see if anything catches our eye. The big news today is that stock futures slide to start the week with more earnings and a Powell speech ahead. A flurry of earnings, another Fed rate hike, new signs of a bull market, and what's ahead next week. Earnings playbook, your best moves ahead of Chipotle, Disney, blah, blah, blah. Nothing great there. National Enquirer sold to a group that includes Indicted, ex-MoviePass chairman. What else? 2 massive earthquakes rock Turkey and Syria as the death toll exceeds 1,300. I actually do know someone who is from Turkey, spends a lot of time in Istanbul. I doubt that they watch the stream, but if for some reason they are, wishing you and your family, my friend, all the best. You know who you are if you are watching. Anyways, continuing along here. Let's see. Of course, the balloon fiasco continues, the spy balloon there. Anyways, stock-specific stuff. Diego, an upgrade from Bernstein, says that the Spirits Giant, my goodness, can rally nearly 30%. Okay, so an upgrade out there to a consumer sort of discretionary-ish type move. I mean, liquor is not a staple. You certainly say that. What else do we know? Stocks making the biggest movers pre-market. Tyson, PayPal, Children's Place. What else? More selling on the Adani fiasco with the Hindenburg Research Report. Man City breaching some financial rules. I don't know what that entails, but I imagine that the penalty is not so nice. What do we see down below? Elon Musk says Twitter is trending to break even after a near bankruptcy. Obviously a positive influence coming out of that. What else do we see? We are looking for stock-specific stuff. Morgan Stanley says Disney can surge 35% earnings, right? In the rearview mirror at this point. U.S. plans to stop buying shots for the public. Here's what that means for you. I suppose they're saying get one before it's too late, but you can make your own decisions on that. Nissan to buy up a 15% stake in Renault's EV unit. Okay. Cloud leaders Amazon, Google, and Microsoft show the once booming market is cooling down. That shouldn't come as a surprise. We know that from the earnings reports. How Zelle is different from the other payment processors. I've never used Zelle. It does not seem to be as user-friendly, so to speak, as these other ones, but I do know it's integrated into your banking apps, so that might make it a little bit more convenient for folks who haven't set up a Venmo, a PayPal, or a Cash App. Just a thought. And that's really it. That's really it for stock-specific stuff. That's it for stock-specific stuff. So nothing crazy this morning from a headlines perspective, for the most part. Just sending out some well wishes to our good friend in Turkey. And even, ironically enough, I know people in Turkey and Syria. And you yourself, if you're from either of those places in the chat, you know people in those places and you're in the chat, then sending my best their way. All right, with all of that said, let's move along to the earnings calendar and see what's going on over here. Anything impressive happening before the bell? Well, if you are a truck lover, and maybe a boat enthusiast, Cummins reporting before the bell here. What do we have in the boat? We've got. I'm blanking on the name for a second. It'll come to me. I'll think of it in just a moment. They're not Cummins. They're not Caterpillars. They're not Pentas. They are Yanmars. Yanmars, twin 312s. Anyways, that's neither here nor there. Yanmar diesel engines, good engines. Pinterest after the close. What else do we see here? Chegg after the close. That's just always an interesting one to trade, or it used to be at least while it was on that massive run. I'm not sure if it's still the case. Before the open on Tuesday, RCL should be an interesting one. Enphase, Chipotle after the close, Uber before the open. There's Disney, so not in the rearview mirror. I was completely wrong. Affirm should just be a rainbows or popcorn sort of stock there. Dominion Energy is worth paying attention to for the energy sector as a whole. PepsiCo before the open on Thursday. Same with AbbVie. Definitely worth watching those two. And then after the close, PayPal, Cloudflare, Lyft. I would say that's probably the major ones you would want to focus on, and nothing crazy on Friday before the open. All right, nothing crazy there. All right, we've hit everything on the earnings calendar. Let's do what we do best by flipping over to our ES 4-hour time frame chart, seeing what's going on from a price action perspective. This is the 4-hour, and we will dive into the price action analysis in just a moment. But who's up in the chat? Who do we see with us here this morning? Going all the way on up to the very top, Mohammed T kicking us off with a GM. Good morning to you. Thanks for tuning in. Appreciate you being here. We've got Thomas Invest, Pete and Repeat, Cy, Roger Tut, who'd we skip? Luke B, Chloe, Jabba, Bishop Ryan. We've got Rebecca F, Brad Mallory. Man, I gotta do something, guys. I gotta either slow down, be more concise with my speech. The whole going fast thing just doesn't seem to be working out for me these days. So slowing down, Ketchup Kings, Kyle Stearns is in the building. The original Rude Boy, I am CJ, Mudaman, Joel Valencia's here, Christina Ann, good morning. We've got Johnny, Live Better, Todd Scholes, Thule, John Cardozo, Tony Ray Chaney. We've got John, Davey Day Trader. Going to look for some green names only now and speed up today's video. Chris Carras. We've got Willow Puff, Stevie J, The Sandman, Lexi B, Cipriano, Nick Farrell, K West Funded Trader. I don't know if that's Key West, short for that maybe, Key West. Carl Jones, honorable shout out there. Same thing with George, Ross Meir. We've got M. Spears, J. Hicks. We've got Ike Wells, Bert Woford. We've got Bluefish Aquariums. Who else? Looking for some green names. Starlight's in the building. Sharath is in the building. Infornity, Killaherb. We've got And I Spent It Wisely. Let's go. What else do we see? Jay with the Gold Cash Bag, Crypto Commando, Susan Virginia Beach, and that's going to do it. All right? So, appreciate all of you being here. Thank you for tuning in. Let's dive into our 4-hour ES chart. What do we see here from a trend perspective? As we pointed out in last night's midnight special, the trend is still clearly and cleanly in the upward direction with consistent higher lows and the opportunity to find another higher low on the 4-hour as well as the daily time frame chart. I'm not really concerned with this gap down that's beginning here. We know that in an overall uptrend, we are looking to buy on some sort of higher low confirmation or on an equal high breakout. And as of right now, we're trying to search for the higher low. We are not necessarily looking for right now an equal high breakout. So structure looks fine. A little bit of gap down, a little bit of slowdown here. It's to be expected, and we talked about why in last night's video. You can check that out if you want to hear more in-depth thoughts. If we take a look at the hourly time frame chart and isolate the price action, you can still see clear as day that we are in an uptrend. We're moving from lower left to upper right. We've got structure in place with lows, higher lows, higher lows. We could search for some sort of higher low here, and we've got highs, and higher highs. So the trend on the hourly is also up, and therefore, once again, we are looking to buy hourly higher low pullbacks or equal high breakouts. We're not really there for an equal high yet, so the main objective would be to search for the higher low pullback. All right, let's continue on down to the 15-minute time frame chart and walk through our 3 questions and see what the market has on tap for us in the first couple minutes of trade here. Is there going to be the opportunity for early morning trade? I would say yes, and that's because the 3 questions goes as follows. Question number 1, where are we opening in relationship to the following day's range, the prior day's range? Here's the high, here's the low. We are currently opening underneath the prior day's range, giving us a true and meaningful gap down, which would suggest that there is the opportunity for early morning trade. There's some kind of knee-jerk reaction. There should be some shock and awe on the open. Folks who went out long here thinking, okay, it's just a liquidation break. The market's going to rebound for the beginning of next week. They're obviously not feeling too happy. Shorts who went out short and held through the weekend are being rewarded. They have the opportunity to say, okay, should we book some profits? We're in an overall uptrend, or do I want to hold this and look for more continuation in the downward direction? Nonetheless, there will be something that folks will be doing on the opening bell at 9:30. We're expecting some kind of knee-jerk reaction here, not necessarily some stagnant balance or a nothing burger on the open at 9:30. Question number 2, where are we opening in relationship to the overnight range? Overnight high was set on the maintenance period or just before the maintenance period after the Friday close, and the overnight low is down here, closer to 41.06. We're definitely opening closer to the overnight low, but certainly not smack on it. We are starting to already see a little bit of a rebound off of this level here. So not as good as it could have been. Would have been best to open here close to the overnight low for our gap rules to be in play, but we'll give it the benefit of the doubt and give something like a squiggly down arrow here for question number 2, indicating yes, it is technically closer to the overnight low as opposed to further away. Question number 3, last but certainly not least, what is the overnight inventory position? Is it net long or net short? To do that, you just extrapolate the settling price from the prior day's session. That's the same thing as saying the close. How much time was spent above versus how much time was spent below? Virtually 100% net short. 100% net short, okay? So knowing the answers to these 3 questions, 100% net short on a true gap down always means that we are looking to employ gap rules here. We are looking for some inventory correction, and that would be to close the gap, to tag up to the prior low of day. Question number 2, though, is telling us we're slightly off of the overnight low, so this inventory correction may have already taken place, and the gap rules may not be so clear. So, in order to just define whether or not they are or are not clear, let's talk about the gap rules. We know the gap is in play as a tradable gap sooner rather than later. So what would be the framework that we use to trade this? As always, we're consistent in applying the gap rules regardless of whether or not the market conditions are on an uptrend, a downtrend. If we're gapping down, if we're gapping up, it does not matter. You apply the gap rules when there is a gap in the market. So the rules go as follows. Opening on this gap down, we are looking for a failure of the overnight low to trade long through the opening print to tag up to the prior high of day, or excuse me, low of day, prior low of day in the case of a gap down. That would be repairing the structure because technically there's not any regular trading hours session that has happened here between Friday's close and today's open, right? So repair the structure, put some trading activity through there, and then look for the gap fill reversal always off of the prior low of day in the case of a gap down. So does the risk reward make sense here is the next logical question to be answering. If we look at the long entry through the open, the stop would have to go underneath the overnight low. This really isn't the greatest risk-reward type trade. You can see there's your reward and there's your possible risk. It's something like a 1.5 to 1, maybe a 1 to 1, depending on slippage for the entry if you mark it in and where the stop loss ultimately goes based on wiggle room. So it doesn't seem to me to be the most clean-cut trade if we have to go all the way back down and test the overnight low. So if that doesn't really work out, then what would we want to see instead? Well, opening here, a very shallow pullback that never gets to the overnight low, that then moves up through the opening print. Okay, now it's game on. Look at your risk reward. All of a sudden, this is your reward and this is your risk. So a shallower pullback, some failure from the sellers sooner rather than later on the open would help the case for a bullish gap fill type trade. All right, what are some other situations? Well, let's say that we do go down to the overnight low, we break down underneath and then do something like this. All right, now you can start to see that we've got a rough inverted head and shoulders. We've got shoulder 1, head, shoulder 2 with the higher low above the overnight low. There might be something to do over a neckline. Maybe you don't have to wait for the breach of the opening print. You can take it out here, then look for the gap to start filling. These are all possibilities and things to be thinking about on the open, just from a situational awareness perspective, okay? So those are just a couple of them, but the main idea behind the gap down this morning is that we are not necessarily chasing the short until we get a lower high confirmation underneath the overnight low. That is your gap and go situation. We'll talk about that in just a moment, but the second half, always, the second half of the gap fill is the gap fill reversal off of the prior low of day in the case of a gap down. So say we do something like this, and we get to here, and you missed the gap fill trade, you missed the long here, maybe the risk reward wasn't good and you just sat on the sidelines, that's completely fine. There's nothing wrong with that. The next trade is to look for the short up against the prior low of day. We repair the structure, we tag up, and then we reverse in the downward direction. You're looking for very simply inverted hammers up here. You're looking for double tops on smaller time frames, 2-minute, 5-minute, sometimes 15-minute, but 15 can be a little bit slow. And then the target is always the opening print. So this would be the target down here. O is for opening print, and you would make sure that your risk reward makes sense for something that does this. All right, so that would be the setup back to the downside. If you're not comfortable taking it off of the prior low of day, then you're better off just waiting for that next leg lower that we just kind of alluded to in the gap and go situation, right? So we open here, we fall, we never sort of get acceptance back above the overnight low. There's some sort of lower high underneath. This is your confirmation signal. Any acceptance really, lower high underneath the overnight low, definitely starts to become more attractive for the gap and go type situation. If the market just falls straight out of the gates, let it go. Don't chase it. It's very, very difficult to try to, sort of chase these trades, especially in the short direction. Market's a little bit extended, or I should say rather the inventory is 100% net short. So any sort of uptick that starts to get shorts nervous here, you don't want to be involved, short on the lows. Your risk reward there is terrible. If this immediately falls and you even take a split second, let's say in the first minute of the trading day, we're trading down here, and you kind of tried to hit the button around 45 seconds in or something, your entry is here, your risk reward is terrible. Where does your stop go? Over the high of day? Does it arbitrarily go somewhere in here? Does it go over the overnight low? It's so unclear that it's not a good trade position to put yourself into. Therefore, I would be patient. I would wait. If we do get this, then again, very simply put, wait for a lower high under the overnight low, and then you can get on board short. If you can nail the top, fantastic. Usually we're looking for reversals off of like a descending VWAP. We're looking for it up against prior structure from something we have off to the left here, or you can take the equal low break for something that does this. Overall, once again, are we looking for something incredible to happen on the short side? Not really. We know that on the 4-hour time frame chart and the hourly time frame chart, we are still technically in an uptrend. If the market does fall here, we are looking to move through the single prints in the ES, 41.15, closes down at 40.89.83, and then we have a gray bar, a possible area of support. So once again, are we being gung-ho about big new money shorts here, looking for massive fall apart? Probably not. Probably not. Let's go up to the hourly time frame chart just so we can tie it all together, and I'll show you the break and retest area that we're talking about. Zooming into the hourly, once again, if we get a gap fill reversal here and a move back lower, you should probably be looking to be a buyer around this area, not necessarily a new money short. The market is in a confirmed hourly and 4-hour uptrend. I would look for any excuse to go long closer to 40.80 as opposed to a big new money short. So on an hourly chart, on a daily chart, on whatever higher time frame you like to trust, you're looking for hammer candles here. On something like a 15-minute chart or a 30-minute chart, you're looking for double bottoms down here. You're looking for inverted head and shoulders down here. That would be a bullish setup. Looking for higher out of this higher low, you would have a great entry. Stop could go here. Entry could be over this. And we're, of course, looking for the equal high over time. Over time. This is more of a, you can think about the market in terms of large time frame setups and small time frame setups. If you're a scalper, you'd like to participate when this is aligned with this. That would be a great idea to be a long down here looking for a quick scalp, right? You could retrade back into the lows. You could do something about the longer time frame setup. Or if you're a longer time frame trader, you're looking to identify when a long setup is about to unfold, a long time frame setup is about to unfold, and see if you can identify the short-term pattern that gets you into the trade with the best possible location. These two things complement one another. They're not completely disjointed. So folks who say that they are not swing trade, or how should I word this? Folks who say that they are swing traders and they are specifically not day traders, that's wrong. That's the wrong way of thinking about it. Everybody, and this again is another direct quote from Peter Resnicek over at Shadow Trader. I've said it time and time again, always giving credit where credit is due. I'll stand on the shoulder of giants forever. He has said time and time again, everybody who participates in the markets, investors, swing traders, day traders, position traders, market makers, whatever, everybody is a day trader at the time of entry. At the time of entry, you are pulling the trigger intraday based on some pattern that's unfolding. Why not give yourself the best setup? Okay, so these two things complement one another. That's really going to do it for the ES and my thinking here for the markets today. We're gapping down. Gap rules are in play. We know that we're looking for a gap fill reversal. Pullbacks that get to here are buyable on the higher time frames based on the break, retest, and possibility of a rally, noting that we're in a strong 4-hour uptrend and a strong hourly uptrend as well. Let's go on down to the 15-minute time frame. We'll take our official YouTube poll here. What does the chat seem to think is going to unfold for today's session? I'm going to scrunch this up so we can see some of those pullback levels here. If you are a bull thinking that we go gap fill, higher low pullback, break into the prior day's range, let's see a number 1 in the chat. If you're a little bit more neutral thinking that we might go gap close, pull back for a reversal, but then kind of sideways respecting the opening print, not doing anything all that impressive, let's see a number 2 in the chat. The bears, you know the deal. There's going to be a slight pop on the open, fall underneath the overnight low, something that does this, getting down into this pullback buy zone around 40.80. That would be a number 3 in our chat today. Maybe you even think It's going to go further than 40.80 to the downside. Those are the bearish outcomes. If you don't know what's going to unfold, that's A-OK. Number 4 will suffice in the chat, and that will do. While that simmers, I'm going to type in the official clickable YouTube poll for our lurkers, of course. For those folks who might not necessarily want to participate via chat, you can click on this and remain anonymous. So what do you think? Question marks. 1, bull. 2, newt. Add option 3, bear. And number 4 is, of course, ostrich. All right. Official clickable YouTube poll is out there in the world. Out there. And yeah, I just want to pause for a brief second. Chronologia, I believe, Chronologically, that's an interesting name. The spelling there is absurd. Not that's a bad thing, but it's just tough on my brain at 8:30 in the morning, 9 o'clock in the morning. He says specifically, or she, I don't know, says the chat was so wrong on Friday. And I just, maybe I'm a little bit spiteful because I was getting called permabull this, permabull that. This was nice to see on Friday morning. I mean, we closed the gap. We got some acceptance higher. Don't get me wrong. The liquidation break did come in the afternoon. But the fact that the market was so bullish on the open after I was getting sort of peppered and called a permabull this, you always think the market's going to go up. Just looking at the charts, man. Just looking at the charts, and the charts proved to be right. And the narrative, so to speak, of, the market must come down at this point, proved to be wrong. Anyways, we're not calling each other out in the chat. We're just having a reasonable discussion that at the end of the day, I think it's useful to trust the charts in front of you and not so much the narrative of, the market's been up for 5 days aggressively, it must come down for 2 days aggressively. That's the gambler's fallacy that we sort of discussed in the weekend update video, if you tuned into that last night. Anyways, scrolling up to the top of the chat responses, what else do we have here? Johnny Whitaker, good morning. Siege, good morning. Nice to see you. What else do we see? Philip M, of course. What else? All right, we're pretty much right into it. Right into it. We've got, who's kicking us off here? Employee of the month is kicking us off with a number 1, bullish on today's session, followed up by Chris Parker, number 3, and Rose Casanova with a number 2. All of our responses in the first 3 answers. So thank you guys for responding. Lots of 1s and 2s flowing in after that. Not so many 3s. It doesn't seem to be clear that the bears have some incredible edge, at least early on. And then, of course, we do get that classic flip later on as I scroll down through the results here. Lots of 4s and 2s. 4s and 2s, like the number 1 responses fall off of a cliff as I get more than halfway through the responses here. So overall, definitely the chat is feeling a little bit more bearish than bullish on today's session. I think that's reasonable, noting the location of the gap down, but I would say that to get bearish, I wouldn't necessarily watch for a number 3 today. I would sort of watch for that gap fill reversal off the prior low of day. Remember, gap rules will always be in play. Gap rules will always be in play. It doesn't guarantee that the market must come to this area, but to me, it's the most tradable situation to deal with. If we do drive lower, you know the deal. We talked about the downside roadmap, so to speak, where an opening drive lower, you're looking for that lower high underneath the overnight low, and then we can watch for the pullback to that 40-80 zone. All right? So that's the primary thought here in the ES, is the gap rules will be in play. If not, straight drive lower, lower high underneath the overnight low is acceptable to look for scalp shorts. Nothing crazy, nothing overstaying your welcome on the downside. All right? That is what I've got for you in the ES. Thank you guys so much for tuning in with me this morning. Let's move along and have a look at our NQ, shall we? /NQ is up next, and we'll go up to the 4-hour time frame chart, and we'll see what's going on over here. If Thinkorswim would load this, and nope, that's my fault because I did not put a / in front of our NQ. So my fault, Thinkorswim. Don't mean to badmouth you on a Monday morning. That's my fault. Let's have a look here at the 4-hour time frame chart, the trend specifically. This is really ugly. Let's auto zoom that. There we are. So obviously a much stronger trend even in the NQ. I mean, it's hard to say that this is weaker than the ES. Look at how much further we are above the prior double top in the NQ, whereas the ES is kind of like right in here, flirting with it already, right? So NQ, very strong, goes without saying, 4-hour uptrend clearly intact, strong opportunity for any higher low on the 4-hour time frame above 12.2. Not really concerned about the NQ pullback here. We know we have some thin structure through the FOMC breakout. Give us the pullback, repair the structure, make sure that we have a firm footing underneath us. I would not mind in the NQ. Repair that structure, all right? Build solid, and then you can build tall, right? Build wide, deep, and then you can build tall. It's engineering principles 101, right? Not necessarily. I'm not an engineer. I know nothing about engineering. It just seems to make sense that if you build a pyramid, you've got a very stable foundation, and that's the equivalent of repairing the structure. That's the extent of my engineering knowledge. I know that there's also plenty of things that go on besides that. Anyways, that is a tangent for neither here nor there. NQ is getting a little bit of a gap down this morning as well. On the hourly time frame chart, once again, we have a clear uptrend in place with lows, higher lows, higher lows. Higher lows here as well as a possibility. Could we pull back and still be producing a higher low? Absolutely. Your break and retest level, as we just pointed out on the 4-hour, is break, retest, and continuation off of 12.2. Note that that is repairing the single print structure. That is a tongue twister. Triple S, triple threat, triple S. Single print structure. Single print structure. That isn't a triple S. That's a double S. All over the place this morning. Brain fog, brain fog, brain fog. My goodness, guys. I don't know what's happening to me. This is one of the issues of why it's so difficult to put out the video sometimes at night, and now I'm going on a tangent that I'm going to regret, but it seems like brain fog has taken over my life for the past month and a half or so, and I don't know quite what to do about that. Anyways, sticking to the NQ. Gapping down, hourly trend is up, 4-hour trend is up. We know that we can experience a break and retest at 12.2. And let's move on down to the 15-minute time frame chart. 15-minute chart on the 3 questions would tell us, number 1, yes, true gap down. Question number 2, yes, we are opening closer to the overnight lows as opposed to the overnight highs, which of course increases the odds for a better risk-reward setup. But notice it's really in between the current overnight low and the gap range that we have to deal with. So not all that enthused about a gap fill trade in the NQ. Question number 3, last but certainly not least, where are we opening in relationship to the prior day's close to gauge the overnight inventory? Net long, net short, clearly net short, right? To the tune of roughly 100%, just like the ES. So yeah, some shock and awe this morning. Early morning trade, definitely more possible than being patient and looking for an opening range. The gap rules are not so clear in the NQ because we have an open that's here. Note that you don't really want to be risking a 1-to-1 on a gap fill type trade with a long through the open to close that gap. Instead, I would just watch to see what the reaction is at the prior low of day. Can we get a gap fill reversal and turn away from that, move lower? Again, the target's always the opening print. Or if you're looking for a more sustained and better short, we know that on the higher time frame structures, hourly and 4-hour, we do have thin structure off to our left here, so a breakdown of our overnight low and a lower high underneath could easily result in a more meaningful pullback. If I scrunch up this chart just to illustrate that, you can see this here. If I do something like this, there's a whole lot of white space, or I suppose black space, to get down to the top of the single prints and then even closing those single prints and getting closer to the structure at 12.2, the break and retest area down here towards those lows. All right, so that's the NQ. Primarily on the open, I would be mindful that something like this could take place, but the risk reward is just not there to take advantage of it unless there's a micro sort of move that goes like this, and then we do that, right? From the prior low of day, looking for a rotation lower. That's your gap fill reversal classic move. And any acceptance in the prior day's range, I would chalk it up to chop until we can get out of this section here, basically a recapture of the value area low. All right, so buyers who get priced back into the prior day's range really only becomes meaningful if we can recapture the value area low. All right, and I would say the same thing about the ES. Let's go on over to the ES just because I missed and omitted the upside move, probably because the gap is a bit larger here on the upside. And it's not so much the value area low in the ES, it's really recapturing the top of the consolidation. And that level is much closer to, what is that, 57 maybe? Let's call it 56. 41.56, okay, right here. So if the bulls do go on parade again, higher low inside the prior day's range, that's fine. Let it do whatever it wants to do down here. You do have this consolidation and congestion to deal with. The more bullish outcome would be some sort of higher low above 56 that we just described right here. All right, right here. So that's the ES, that's the NQ. Let's move on over to the Russell /RTY. There we go again. Have a look at the 4-hour time frame chart. Taking a look at the trend, what do we see here? Definitely an uptrend, lows, higher lows, higher lows. Very clear opportunity for a major higher low anywhere, like literally anywhere over 1920. No big deal in the Russell to see a deeper pullback here. It does not strike me as the end of the world. We came into this overhead resistance, the gray bar that we established from last week's stream, pulling back off of resistance after making a higher high. Of course, you're just looking for the next logical step, which is a HL higher low at this point in time. Anything above, again, 1920 on the 4-hour chart will suffice. Hourly time frame chart, let's see what's going on over here. In terms of levels, once again, when we isolate the price action to more recent activity, still in a very clear uptrend. We've got lows, higher lows, higher lows, kind of breaking down underneath those now, but we've also got highs, higher highs, higher highs. These are equal highs up at the top, just worth noting, at 2015.50 right here. And here, I suppose the true accurate level might be closer to 2016, whatever you want to call it. Doesn't matter so much, but 2015, 2016, that's your equal high breakout area on the Russell. We are getting a very minor gap down here, but note again, just like the NQ, we do have thin structure underneath us here, so it wouldn't be all that surprising to see a deeper pullback in the Russell, and we could go and start to test the single prints. 1955 closes 1944. 1920 is that higher time frame line in the sand, so plenty of opportunity for a higher low off of the single print close. We could go underneath it a little bit and find a higher low. We could never test it and find a higher low, right? So all good on the Russell higher time frames. Let's go 15-minute time frame chart and see what's going on here. 3 questions as always. Number 1, gap down, just like everything else so far this morning, so a down arrow. Number 2, opening closer to the overnight low as opposed to the overnight high, but certainly off of it slightly and in the midpoint, just like the NQ of the overnight gap range. So not all that enthused about a risk-reward probability setting up here for a fade. Question number 3, last but not least, of course, overnight inventory position, 100% net short with almost all of the activity underneath the prior day's closing print. So yes, shock and awe here. Gap rules will be in play. Unfortunately, the risk-reward parameters are not great for actually taking the trade. You're going to watch for the just outcome of the rules. So once again, this is the primary objective of the market, and you'll learn something if that does not happen. If we just accept into the prior day's range, notice that this is a big opportunity for resistance at the value area low. We would still be underneath the congestion zone from Friday afternoon instead of recapturing it on the recapture of the prior low of day like the NQ and the Russell, or excuse me, SPY, ES. And instead, you would need to see really a much more impressive rally up here for something that gets more bullish over this structure. Don't really think that that's going to be the case for today's session, but I've been wrong in the past. If the market moves lower, and again, we don't get something that does this, then straight lower out of the gates, you're looking for the lower high underneath the overnight low. And once again, 1955 comes into range as a target as the top of the single prints. All right, that's your Russell on the downside. Once again, this acts as a market leader. So always have the Russell up, even if it's just a market minder window like what I have over here. Keep this up. Keep an eye on the percentage change from the opening print. Are we above the open? Are we underneath the open? To what extent are we above or below the opening print? And what are the other indexes doing? Are they confirming or are they diverging from what's going on with the Russell? All right, let's move along. Take a look at the typical cash ETFs. SPY is up first. Daily time frame chart. We talked about this ad nauseum in last night's video. In and out inside bar here. Bearish, indicating some liquidation break. Folks not really wanting to commit new money long volume at the highs. Opening on a gap down just as we described in the ES a moment ago. Here is the prior low of day, much closer to 411. If we take out the overnight low with no acceptance and then retrace through the opening print, there is your gap fill trade. Notice that the risk reward parameters here in the SPY cash ETF, they're okay. They're still not great. It's probably something like a 1.5 to 1 risk reward ratio if we're using the current overnight low. So the first initial pullback wants to be a bit shallower and then some sort of retracement up towards that 411. The overnight low is 408.40 for folks who are just tuning in and listening. Can't see the charts. 408.40 is your overnight low in the SPY. Anything that fails to accept underneath, look for that gap fill. Once the gap closes off of 411, retarget the opening print, which is slated to be somewhere around 409.60 at this point in time. Of course, subject to change in the next, 23-ish minutes. All right. So With that, we'll move along to our QQQ. And by the way, the downside targets, they're all described in last night's episode of the weekly watch list, so we're not going to spend too much time on it. In and out bar, QQQ daily, same idea. Thinking about downside here, we are opening on the gap down. Your prior low of day is 304.50. Your overnight low is much closer to 302.50. Again, you could just, based on those two numbers, and the open is almost smack in the midpoint, 303.50. It is smack in the midpoint, 1-to-1, $1 of reward above and $1 of risk underneath. Not really worth taking on the open, right? So what you would need to see is a more shallow pullback and then a rally, which, just look at the prior day's ranges, look at the prior day's opening candles. It doesn't seem likely that the QQQ is not going to give us a shallow pullback. Maybe if you're watching on like a 2-minute chart and you're quick draw McGraw off the open, you can do it. But, when we're dealing with ranges that are kind of tight like this, not always so clear to pick off the early trade. You got to be really attentive to the charts. Anyways, QQQ, watching for the gap fill reversal off of 304.50 prior low of day. And then our downside targets are the top of the single prints at 299.20. Once again, all of these levels have been discussed in last night's episode. The key area to hold is right around 296.50. 296.50, line in the sand for the QQQ on this week's session. IWM Russell 2000 small caps, we just covered them with the Russell Futures /RTY. The idea is the exact same. Notice that the gap is virtually non-existent in the IWM cash ETF. Not trading for that, just watching to see, do we get acceptance in the prior day's range or underneath the prior day's range? If we accept in the prior day's range, we know the deal. We're probably a little bit more cautious of new shorts and spying the Qs. If we stay underneath the prior day's range, game on for the pullbacks towards the top of the single prints in the cash ETFs. Let's quickly blast through the core list of companies, then we'll address the chat, see what's going on over there. Apple, not much has changed here since our update from last night's video. Opening underneath the consolidation lows from Friday. So I think the risk is to the downside, of course, closing this thin structure, so to speak, down towards 151, Thursday's high. That's the risk to me, watching for possible shorts into that area. Just doodling around and not really doing anything impressive under the opening print. Nothing to do. I mean, it's very difficult to long into this as overhead supply, and the fact that we had such an aggressive rally on the earnings sort of announcement. The market's been up aggressively in Apple here. New money longs chasing, very, very difficult. So again, the idea is to see if we can find a short under the overnight low to tag up to thin structure at 151. Next up is Netflix. What's going on in Netflix? Double top we talked about in last night's episode. You can go back and watch it. The threat is for a neckline breakdown underneath 352.50. Not currently in play. We are opening underneath the possible topping area, though, at 368.50. So I would keep this on radar for possible shorts under Friday's low. If we take out Friday's low, it's game on to the neckline for that equal low pullback as well, getting to 352.50 and then a break from there. We know 333 is the ultimate target for longer time frame traders looking to capture maybe a little bit of a swing or something longer than a day trade scalp, basically. 333 on the downside. Next up is Tesla. What's going on with Tessie? Tweezer top, up here you can see touch and touch. I heard there was something about a lawsuit being dropped against Elon Musk over the weekend or something like that, and maybe that's what sparked this rally here. Doesn't really mean much in the context of the daily time frame chart. We're still opening very, centered. Not exactly centered, but we're still inside of the 2-day balance range here. Quite simply put, these are always easy trades to identify. It's either long over the top or short underneath the lows. In the midpoint here, it's not so clear. It's not so clear, especially noting that we've closed, like the daily closes. Remember, the close is what counts. The close is inside the midpoint of that range on both days there for all intents and purposes. So, knowing that, not convinced that Tesla is something obvious to do on the open unless it's a clear bullish bar above, higher low pullback stays above 197.50, then game on. As long as we're kind of above a VWAP, looking for continuation. If the market falls to the bottom, dead cat bounce, equal low, then the breakdown is underneath 182.40 in Tesla to get back down closer to 170. Next up, we've got Google. What's going on with Google? This one is still stuck in no man's land. We made comments about this in last night's episode. I would encourage you to go back and watch that if you have not done so already. We're just stuck here. We've got a gap overhead to be thinking about, a gap underneath us to be thinking about. Maybe something comes into play today underneath 102.60 for the gap close here. But just, being in between this area, really weird because of the Meta earnings, it gapped up and then it gapped down on its own earnings. Then it rallied to close the gap, but completely failed and closed outside of Thursday's range. I mean, just total lack of clarity here on the Google daily time frame. I mean, don't get me wrong, we have made significant strides in the upward direction. This is a huge higher high outside of some sort of cup and handle type pattern. So the overall context is definitely bullish, but for a day trade, the scalp and the levels are not abundantly obvious to me. So again, if anything, just watching that 102.60 for a possible gap close on the downside for this morning's open, considering we're opening closer to that as opposed to the highs. Next up, we've got Meta. What's going on with the metaverse? The gap is holding thus far, and once again, like Tesla, we're inside the midpoint of the 2-day range. Unlike Tesla, this gap is just absolutely monstrous. So I don't think it's clear that you would do something immediately on the open. Sellers, of course, want to see a breakdown of Friday's low, 183, to start threatening the gap close underneath. But I mean, right now, it's not so clear. Again, opening in the midpoint of this 2-day range, patience definitely the play here. It's not, there's no knee-jerk reaction. The market's traded this area for the past 2 days or so. It's very comfortable with these highs, very comfortable with these lows being in the midpoint. It's trying to probably search to either go to one of those areas and get continuation or breakdown, right? Sideways is always an option, but considering the size of the gap up, I would imagine Meta wants to do something up here. Next up, NVIDIA. What's going on here? Inside bar on Friday's session, we're gapping. Are we gapping ever so slightly, gapping down underneath the inside bar low? That is a good setup. So this morning you would watch for any lower highs in NVIDIA underneath this area. So 210.50. Anything underneath 210.50, you could even just use the opening print from the prior day, which literally is 210. Any lower highs in NVIDIA underneath 210, anything that stays underneath 210.50, looking for shorts, either on that high if you can pick it off, if you're astute and you can catch the inverted hammer, if you can find some sort of double top, head and shoulders, whatever the pattern may be, that's where you want to look to pick off your short entry and then look for lower, right? That would be an inverted hammer inside bar breakdown to retest 199.75. I like the setup here. It's much clearer, obviously, than something like Google, than something like Meta, than something like Tesla, all right? So very nice here in NVIDIA, watching for that. If we do accept above 210.50, then it's off the table. We're just chopping around in a 2-day range. All right, so not really in love, not so clear with what takes place there. Next up, Microsoft. What's going on with Softy? Gapping down a little bit. Is it going to give us an island? Not quite. Almost. It would be nice if this could gap down underneath 255.10. That would give us an island reversal off of these highs, abandoned baby reversal, all the nonsense names that people have for it, whatever. We would be looking for acceptance here and then a rotation lower to the breakout point at 249.50. All right, so we're not quite doing it. We are opening in the gap range. Doesn't mean that we can't see that reversal and a move lower, but so far, we're gapping red under red. So this selling pressure into the close doesn't really have me feeling like, okay, there's going to be longs who are just instantly going to close out on the open. They probably should have done so based on the close of Friday's bar. So we're not gapping red under green, not really concerned from that perspective, but overall, the just pure lack of acceptance at these highs. We've seen some headlines that continue to bash the cloud business of these big major players. So just from a fundamental perspective, there's sort of headlines about this stuff right now, which would indicate weakness in Microsoft. So just watch your 255.10 prior high of the FOMC rally. If we break down underneath it, you know the deal. Once again, 249.50 comes into sights. If we get the gap fill reversal, that is also a reasonable short setup. So because of the gap down in Microsoft, I would also say, failure of this overnight low long through the opening print, it's definitely on the table. We've got a double gap above us. There's a double gap above us. So if we can take out the opening print after a failure here, this should close relatively rapidly, right? There's virtually no structure here. Sure, we get something from back in the past, but that's the past, right? We're looking through the overnight range that fills at 257.20 for those just listening. Next up, last but not least, we've got the mini beast, Amazon. What's going on with Amazon? Certainly already experiencing more of that abandoned baby, island reversal, whatever you want to call it. Gap down the other day, right? Closes the gap, no acceptance, closes weak down towards the lows. Getting a bit of a gap down here this morning. Just seems incredibly weak, like the buyers have absolutely vanished and the sellers are stepping back up in the, essence of this as an overall downtrend, right? If we go to a weekly time frame chart, Amazon, unlike the SPY, has still remained underneath its resistance trend line, right? We have highs, lower highs, lower highs. This could easily just be another set of lower highs. It's not so clear to me that Amazon is dramatically reversing for a, huge trend reversal on the weekly. We still have lows, lower lows, and we still have highs, lower highs. So, just from that perspective, it's not the end of the world for Amazon to actually break down and, maybe revisit the lows. Now, from a day trader's perspective, because we're taking things one step at a time, it would just mean continued acceptance under 103. It's all about the retest of 99.25, the breakout from the bull flag area right here. So I do think Amazon could be a reasonable short into that area for the reasons that we just mentioned. If we get acceptance in the prior day's range, doesn't seem like there's an obvious long there. The long would be back over this 108 pressure cooker top, just taking out all of the shorts who got overly aggressive towards the lows on Friday's session. But you can imagine that there's quite a lot of work to be done before that's even a thought as being in play. All right. That's going to do it for the core list of companies. Let's hang out with the chat for just a brief moment here. We've got 9:18 on the clock. We'll head out at 9:20, 9:22, whatever. Spend some time with you folks. Once again, just always do appreciate you guys tuning in. It's great to see what the channel has become, and although I'm the one putting out the videos, couldn't do it without you guys. So truly, I know I said it in last night's video, kind of felt like a heartfelt moment. I do appreciate every single one of you, especially folks with green names. I appreciate you guys just a hair more than our other viewers. You are obviously supporting the channel with some sort of monetary donation, which is always just put into the coffee fund or helping me hopefully improve my speech, being more alert with some stronger coffee. Maybe I have to get back on the Cuban rocket fuel. I don't know. But scrolling back up, seeing what we've got in the chat. Thank you guys so much for tuning in once again. Sierra chart is number 1 apparently for my Spent It Wisely. It could be. Been bearish for a while. From Rob B. Says he believes it'll end green today though. Could be. Hibiscus tea will end my brain fog. More sleep. Yeah, it definitely is more sleep. That's something worth noting there. Mushroom coffee, take ashwagandha. Get your mail, may help clear the mind. Yeah, it could be. I could go outside and do that. That would be nice. Get some fresh air. Take a day off sometime. Yeah, I mean that would definitely help as well. What else? What else do we see here? Some other hopefully more inspiring things down towards the bottom. What else? Can we go over the NQ levels? We kind of did that already. We went through the NQ levels, but I am seeing someone ask about Enphase, which is kiloherb. ENPH is the ticker there. So Enphase. Taking a look at Enphase for kiloherb here and anyone else who's interested. They are reporting earnings, right? If I'm not mistaken. Yeah, reporting earnings after the close on Tuesday. So be aware of that. Ahead of their earnings, though, what's the chart structure suggesting? Let's go ahead and clear this drawing set and start from scratch over here. And what I like to do, guys, is go back and forth between, let's go back to Enphase. Go back and forth between a daily and an hourly chart to sort of refine my thinking about any given chart, right? So currently in a daily downtrend, that goes without saying. Highs, lower highs, lower highs, lower highs. Not really worth drawing a trend line on. We know we're in a downtrend. We're also getting lows, lower lows, lower lows. So everything there is there. All the pieces of the puzzle are there for a downtrend. This prior pivot is now interesting to me because what was prior support is now acting as potential resistance here. So 234.66 is the number to beat. If we can get above it, then you can clearly see the opportunity for an inverted head and shoulders. And that, of course, would be bullish in the long run. Now, with earnings around the corner, I'm not so sure that it's going to play nicely and respect this. I would imagine that some kind of gap unfolds here that either gets the Enphase chart up here or wildly down here. I have no idea which way it will go. Being in a downtrend, maybe the trend will prevail and we will move lower, but it's too difficult to say, and I would not encourage you to bet on that. So I would say patience is the play until earnings. For today's session, I would definitely be a little bit more bearish than bullish, I would imagine. Let's actually throw on the hourly and look for extended hours. Let's go extended hours here. We're opening inside the prior day's range. Okay, so no gap inside of Enphase. Let's turn off those extended hours. We're opening in the range. Quite simply put, longs want to see it over 235, or shorts, you're looking for a breakdown underneath 219.36 to continue the move in the downward direction. Let's go back to the daily time frame chart. This makes complete sense. We've got ourselves an inverted hammer on Friday's session, almost an in and out bar. But whenever you take out the low of an inverted hammer, you should expect some downward action, right? This is indicative of some selling pressure. Buyers are weakening. If you take out the low of any given bar, you're looking for a downtrend to ensue. So 219.36 is the breakdown level. Equal lows would be the target. Bulls want to see it over 234.66. Hopefully that helps you kill a herb for end phase on today's trading session. All right, that is that. I guess we'll kind of leave it at that. I think we talked about. Hang on, I'm not sure what Walter is saying here. What are my thoughts about the stock? I don't know what the stock is. But anyways, thank you for all of your chatting here. The nootropics certainly seems to be something to look into. End phase earnings will move the stock bigly one direction or another. Would definitely agree with that from N. Jacob. And then let's just take one last look at the ES futures to make sure we're not missing anything before we sign out, and then we'll leave it at that. Or 9:23 is a good time to sign off here. So far, so good. Not missing anything. Still right around where we were talking about the ES levels prior. We're opening on a gap down, although the risk-reward parameters for taking advantage of the gap fill reversal, the gap fill in the first place, and then the reversal are not so clear. The reversal is probably what you want to pay attention to off of the prior low of day, or if we get a gap and go, look for the lower high underneath your overnight low, and then it's game on for a pullback into 40.80. 40.80, 40.90, this general area is what we're looking for on a market breakdown here. All right. That is going to do it. That is, the Sam Bankman cocktail. I'm going to pass on that one, Keaton Rogers, although I do appreciate the just the thoughtfulness of recommending something slightly related to his, just the crypto, the trading space, the crypto space. Good jokes. I like a good laugh on a Monday morning, so thank you for that. Hit the thumbs up button if you would, folks, on the way out. I would greatly appreciate it. Again, go and check out last night's video. I know it came out late, but it's got some gold in there. Quite literally, we talk about the gold chart, but it also just has some overall gold on trading perspectives, I think, and what you should be looking for in terms of trend analysis and picking apart charts. So with that, we're truly signing out. Thank you so much to everybody who tuned in. Thumbs up button on the way out goes a long way to support the channel. I wish all of you green names and white/gray names, black names if you're on a light mode browser, wish all of you a green trading day, and I will see you in the next one. Thanks for tuning in. Adios.